Welcome to the deep dive. We've got a really interesting stack of source material you've shared with us today, all digging into the outlook for the stock market, specifically for June 2025.
That's right. We're focusing mainly on analysis based on the Stock Trader's Almanac, looking really closely at June 2025, but through that lens of, historical data and seasonal patterns.
Okay, so our mission here is pretty clear. Sift through this data, pull out the key insights, and maybe figure out what this historical angle could mean for you this coming June. All right, let's dive in. According to the Almanac, what does history typically tell us about June for the markets?
Well, historically, June often marks the start of the weakest seasonal stretch for the market. It's often seen as kind of wrapping up any summer rally that might have been going on.
Right.
And it can be when the summer doldrums really begin to set in, especially towards the end of the month.
So not exactly a powerhouse month on average then, based purely on those historical numbers.
Exactly. Yeah, the historical averages from the Almanac really bear that out. If you look since, 1950 or 71, depending on the index, the S&P 500, it's averaged just a tiny 0.1% gain in June.
Barely positive.
Barely. And the Dow Jones Industrial Average actually averages a small decline historically, about minus 0.2%. And, looking at wins versus losses, the Dow has been up just slightly less often than it's been down in June over that long period.
But I see the NASDAQ tends to behave a little differently, historically speaking, in June.
It does, yeah. The NASDAQ kind of stands out here. It has a historically positive average gain of 0.9% in June, and it's been up quite a few more times than it's been down since 1971. So while the Dow and S&P show that historical weakness or flatness, NASDAQ has, a different historical rhythm for this month.
Okay. But even with those small averages, the sources do point to some really rough Junes in the past. What were some of the worst examples they cited?
Oh, definitely. There have been some challenging Junes, for sure. The sources highlight some pretty big drops. Let's see. The S&P 500 fell sharply, minus 8.5%, just back in June 2022.
Wow, recent.
Yeah. And the DJIA saw a really significant decline, minus 10.2% back in June 2008. That was obviously a tough year overall.
Right.
NASDAQ also had some nasty Junes back then, down 9.1% in '08, and also down 9.4% in June 2002. So, averages tell part of the story.
Sure.
But the potential for these notable declines in certain years is definitely there historically.
Okay, now 2025 adds another layer. It's a post-presidential election year. Does that specific historical context change the picture for June, according to the Almanac?
Right, and this is where the historical pattern gets particularly interesting, especially for the major indices like the Dow and the S&P. Historically, June in a post-election year, it's tended to be even weaker for these indices compared to just any old month.
How much weaker?
Well, the DJIA averages a minus 1.0% loss, and the S&P 500 averages a minus 0.5% loss, specifically in those post-election year Junes, based on the Almanac's data.
Why do you think that is, that sort of post-election hangover hitting June? Does the analysis offer a reason?
Well, the historical analysis suggests it might be related to the market, digesting the new political landscape, or maybe potential policy shifts after that initial post-election buzz wears off. Sometimes there's just a period of uncertainty, maybe some repositioning as investors try to gauge the direction of the new administration. It's probably not one single thing.
Right, multifaceted.
Exactly. But historically, it has marked a period of weakness for those big indices.
That makes sense. Are there any exceptions? Does everything tend to be weak in post-election Junes?
Actually, yes, there are exceptions noted in the sources. The NASDAQ and the Russell 2000, the small cap index, they've historically bucked this trend in post-election Junes. They actually show positive averages.
Oh, interesting.
Yeah, plus 0.8% for NASDAQ, plus 1.2% for the Russell 2K. So while the big caps have historically struggled, in those specific post-election Junes, tech and small caps have shown more resilience, historically speaking. It really highlights how these patterns aren't always uniform across the whole market.
Good point. Okay, what about timing within the month? Does the Almanac highlight any specific day trading or intra-month patterns for June?
Yeah, there are a couple of interesting points there. The very first trading day of June, Historically, it has a pretty strong tendency. The DJIA, for instance, has been up on 28 of the last 36 first trading days.
That's quite a track record.
It is, and it's pretty broad, too. Most indices tend to start June on a positive note historically.
Okay, so a potentially strong start. What about the end of the month? That's also the end of the quarter, right?
Exactly. The last trading day of June is both month end and quarter end. And this period, sometimes you hear about portfolio pumping.
Right, where funds maybe buy things up to make their reports look better.
Precisely. Where fund managers might buy assets to boost their reported performance figures. But the historical results here are actually pretty mixed, according to the sources.
Ooh.
Yeah, the DJIA has actually been down more often than up on the last trading day of June, historically. But the NASDAQ, on the other hand, has shown a positive bias. More recently, it was up in 10 of the last 13 end of June sessions they cited. So portfolio pumping might be a factor.
But not a guaranteed up day.
Not at all. The historical outcome just isn't consistent across all the indices for that last day.
Got it. Okay, let's talk about quadruple witching. June is one of those months. How does that whole event fit into the historical picture for June?
Right, quad witching. That's the simultaneous expiration of 4 types of derivatives. Stock options, index options, stock futures, and index futures. Happens 4 times a year.
That usually means more volatility, right?
Often, yes.
Mhm.
Especially on the expiration day itself, as traders are closing out or rolling over their positions, it can definitely stir things up.
Okay, so the day itself can be choppy, but the sources point to something pretty specific about the week after quad witching in June, don't they?
Yes, this is where a really strong historical pattern seems to emerge from the almanac data. The week immediately following the June quad-witching expiration day has a historically poor tendency, particularly for the Dow.
How poor.
The DJIA has fallen in 27 of the last 33 instances during this specific week. That's quite a high percentage, and it comes with an average loss. Since 1990, that average loss has been around 0.8%.
Wow. Okay, 27 out of 33 times down for the Dow in that specific week. That's a very noticeable historical bias. Any thoughts on why that might happen?
Well, the thinking often revolves around the unwinding of positions related to the expiration, or perhaps the market loses some, temporary support or momentum that might have been tied to positioning around the options and futures expiring.
Like the scaffolding comes down.
Sort of, yeah. Once those derivatives expire, the temporary forces they might have exerted on the market disappear, and sometimes that leads to a pullback as the market kind of finds its footing again without those influences.
Interesting. Now, there's also a big historical pattern specifically for the NASDAQ that kind of culminates in June, right?
Yes, exactly. June is historically the final month of what the almanac calls the NASDAQ's best 8-month strategy. This seasonal pattern, it covers the period from November 1st right through to June 30th.
And the historical performance of just trading NASDAQ during that specific November to June window, it's pretty dramatic.
It really is quite striking historically. The sources highlight that, hypothetically, investing just $10,000 in the NASDAQ only during this November to June window each year, starting back in 1971,
Yeah.
that would have grown to over $1.4 million by 2023.
Wow. Just from that seasonal timing.
Just from that timing. And they even note that if you layered in a technical indicator like MACD for maybe timing entries within that window, the historical returns could potentially have been boosted significantly higher, almost $3.4 million in their example.
That historical performance really underscores the kind of seasonal strength NASDAQ has, historically shown in that specific period.
Absolutely. And the key implication here, if you're following this historical pattern, is what comes after June.
Right. The end of the best months implies
The start of the historically worst months. Specifically for NASDAQ, the period from July through October, but especially August and September, are often singled out in the sources as being historically the weakest stretch.
So June marks the historical end of that strong seasonal run for the tech index.
Exactly. That's the pattern the historical data shows.
Okay, this is a lot of really fascinating historical context from the almanac. Let's try to bring it all together. Based purely on these historical tendencies and seasonal patterns, what are the main takeaways for June 2025?
Okay, so the historical picture painted by the sources suggests basically June is typically a relatively weak month overall, often the start of those summer doldrums.
Okay.
Then layer in the fact it's a post-presidential election year, like 2025. Historically, that's meant even weaker performance on average for the DJIA and S&P 500, though remember, NASDAQ has historically shown more resilience in those specific post-election Junes.
Got it. Weak overall, weaker for Dow S&P post-election. What else?
The really notable intra-month pattern is that historical tendency for declines in the week following the quadruple witching day, especially, again, for the Dow.
Right, that 27 out of 33 number.
Yeah. And finally, for the Nasdaq, June represents the historical end of its strongest seasonal period, which points to potential historical headwinds in the months immediately following, like July through October.
Now, it's really important we emphasize, and the sources definitely do, that this is all based purely on how the market has behaved historically. These are seasonal patterns, tendencies. This isn't a prediction, right?
Absolutely not. You have to think of it as historical context. It's one tool maybe to help understand potential leanings based on decades of data, but it is definitely not a forecast that's guaranteed to unfold for this specific June 2025.
So how do we, or maybe more importantly, how should you, the listener, sort of balance this historical pattern analysis with everything else that's actually happening in the market right now?
Yeah, that's the crucial question, isn't it? While these historical patterns are fascinating and they can highlight, potential biases or leanings, the actual market movement this June 2025, is going to be driven by the realities of today.
Right.
Like macroeconomic data releases, corporate earnings reports coming out, what the Federal Reserve says and does, geopolitical events, overall investor sentiment, all that stuff. There's that quote from Ralph Acampra and the sources.
Yeah,
Price is a fact, earnings is an estimate. I think that's a powerful reminder. Historical context is valuable, sure, but the undeniable facts of current price action and the estimates people are making about future earnings, that's what the market is reacting to right now, in the moment.
Yeah, that's a great point. And it brings to mind another quote you pulled from the sources, from J. Wells Wilder Jr., the guy who created the RSI indicator. He said, if you can't deal with emotion, get out of trading.
Exactly.
And looking at historical patterns, especially ones that warn about potential weakness, that could definitely stir up emotions like fear or maybe even overconfidence if the pattern looks good.
Precisely. Historical tendencies can maybe inform your strategy, give you some perspective, but they should never override the need to manage your own emotions and react rationally to the current market facts and your own analysis.
Okay, so let's wrap this up. The historical analysis from the Almanac suggests June 2025, based purely on past patterns, might have some headwinds, particularly for the Dow and S&P, given it's a post-election year, and notably in that week right after quadruple witching.
Right. And it also marks that historical end of NASDAQ's strongest seasonal stretch.
That's the summary of the historical context from the sources. But again, we have to stress historical tendency, not prophecy, for this June.
Absolutely. Current conditions are key.
Okay, so let's leave you with a thought to consider as you look ahead to June. We spent this time looking back, digging into decades of historical data, kind of drawing on that Winston Churchill idea mentioned in the sources. The longer you can look back, the farther you can look forward. But we also have that really sharp, practical point from Ralph Acampra. Price is a fact. Earnings is an estimate. So the question for you is, how do you balance that powerful long-term historical perspective with the undeniable facts and the necessary estimates that are shaping the market right now as you navigate this specific month ahead? Something to ponder.